Students, today we will solve one example of process costing in subject Advanced Accounting and Auditing Paper 3 for class 2nd year BCom semester 4 Veer Narmad South Gujarat University. Here is the question. Goury Manufacturing Company supplies you the following information for the year ended 31st March 2017. Process A, Process B and Process C. Raw materials introduced: Process A 12,000 units, Process B 2,440 units and Process C 2,600 units. Cost of raw materials per unit rupees 5 in all three processes. Direct wages 34,000 in process A, 24,000 in process B and 15,000 in process C. Production overhead 16,160 rupees in process A, 16,200 rupees in process B and 9,600 rupees in process C. Normal loss as a percentage on units entered in process: 4% in process A, 5% in process B and 3% in process C. Wastage as a percentage on units entered in process: 6% in process A, 5% in process B and 4% in process C. Scrap value per unit of wastage rupees 3 in process A, rupees 4 in process B, rupees 5 in process C. Output transferred to the next process: 70% of process A, 60% of process B, and output sold at the end of the process: 30% in process A, 40% in process B and 100% in process C. Selling price per unit: rupees 12 in process A, rupees 16 in process B and rupees 17 in process C. From the above information, we are to prepare process A, B and C accounts. First of all, let us understand the question. Here, final product passes through three processes: A, B and C. In every process, there is an introduction of raw material at particular rate of rupees 5 per unit. Direct wages, production overheads are available. Normal loss is a percentage of units entered in process. Same wastage as a percentage on units entered in every process. The new thing is output transferred to the next process. Out of total production of process A, 70% units transferred to process B at cost price, whereas in process B, 60% of output transferred to process C, and C is the last process, so there is no question of transfer to the next process. Then output sold at the end of the process: at the end of process A, 30% of output is sold at rupees 12 per unit, and in process B, 40% of output sold at a selling price of rupees 16 per unit, and final process C, 100%, it means total output sold at rupees 17 per unit. These are the new points in this particular sum. Rest of the points are covered in previous examples. Now let us prepare process accounts one by one. First, process A account. On debit side, particulars, units, amount, and on credit side, particulars, units and amount. First of all, on debit side, two raw materials introduced: 12,000 units at rupees 5 per unit, total amount 60,000. Again debit side, two wages paid for process A, 34,000. Two overheads, rupees 16,160. On credit side, we will record by normal loss 4% of input. It means 4% of 12,000 units, that is 480, with no realization value. Then there is a wastage, 6% of input. So 6% of 12,000 units, that is 720 units, and realized rupees 3 per unit. So amount rupees 2160. And then process B account, that is transferred 70%, and by bank sale, that is 30%. So now first of all let us calculate the cost price of 70% and 30%. Here is the working. Units introduced 12,000 units and total cost 1,10,160, that is material, wages and overhead, minus normal loss 480 units with 0 rupees realization value, and wastage 720 units and 2160 realized value, and normal output and normal cost 10,800 units and rupees 1,08,000 rupees total cost. So per unit cost would be 1,08,000 divided by 10,800 units is equal to rupees 10 per unit. Now here let us see the units output or produced at the end of process A. Total 12,000 units introduced minus 480 minus 720, it will result to 10,800 units. Here is the working. So out of 10,800, 70%, that is 7,560 units transfer to process B, and its cost price would be rupees 10. So 10 multiply 7,560 units, so total amount 75,600, and 30% units sold. So here it is by bank sales, 30% of 10,800, that is 3,240, sold at rupees 12. Sold at rupees 12. So total amount 38,880, and there is a profit of rupees 2, that is selling price minus cost, 12 minus 10 rupees 2 per unit, and that profit will be transferred to costing profit and loss account, and it will be recorded in process A account on debit side, that is 3,240 units multiply rupees 2, an amount 6,480. And finally our process A account is tallied with 12,000 units and 1,16,640 rupees. Now we will prepare process B account, but let us understand here, out of total production only 70% will be transferred to process B account. Here is the process B account. On debit side, first we will record transfer from process A 7,560 units and rupees 75,600. Further introduction of raw material in process B 2,440 units at rupees 5, so total amount 12,200. Then wages 24,000 and overheads 16,200. By normal loss as a percentage of total input, so it will be 7,560 plus 2,440, it amounts to 10,000, and 5% of 10,000, that is 500 units with no realization value, and same percentage wastage, that is 5% of 10,000, that is 500 units, sold at a price of rupees 4 per unit, so total amount realized rupees 2,000. And now out of 10,000, 500 normal loss and 500 wastage, that is 1,000, so total output 9,000 units, and out of 9,000, 60% unit transferred to process C, that it would be 5,400, and remaining 3,600 units are sold directly from the process B. So now we will work out total cost of 9,000 units. Here is the working. Units introduced plus transfer from process A 10,000 units with total cost 1,28,000, that is Material 75,600 plus 12,200. Wages 24,000 plus overhead 16,200. Minus normal loss 500 units with no realization value. Wastage 500 units and realized value 2000. So normal output 9,000 units and cost 1,26,000. So per unit cost would be 1,26,000 divided by 9,000 units equal to rupees 14 per unit. So 5,400 units, that is 60% of 9,000, will be transferred to process C at rupees 14 per unit. So total amount 75,600, and remaining 40%, that is 3,600 units, will be sold out at rupees 16 per unit. So here by bank sale proceeds 57,600 rupees, and profit of rupees 2, that is 16 minus 14, 2 rupees per unit, will be transferred to costing profit and loss account. So process B account debit side to profit and loss account 3,600 units multiply rupees 2, that is 7,200 rupees. And finally our process B account gets tally with 10,000 units and rupees 1,35,200 rupees. Out of process B, 5,400 units only will be transferred to the next process. Now we will prepare process C account. Here is the process C account. On debit side, first we will record transfer from process B account 5,400 units and 75,600 rupees. Next, to raw material introduced 2,600 units and 13,000 rupees. To wages 15,000 rupees and to overhead 9,600 rupees. Then by normal loss on credit side. So we have total material input 5 plus 2 7 plus 1 8,000. 8,000 into 3%, it would be 240 with no realized value. Then by wastage 4%, that is 320 with realized value 1,600 rupees. And finally by finished goods, unit will be 8,000 minus 560, it would be 7,440. Now let us calculate the cost of 7,440 units. Here is the working. Units introduced plus transfer from last process 8,000 units total, 5,400 plus 2,600, and total cost 1,13,200, that is material cost plus wages plus overhead. Then less normal loss 240 units with no realized value, less wastage 320 units and 1,600 rupees. So our normal output amounts to 7,440 units and 1,11,600 rupees. Now cost per unit amounts to 1,11,600 divided by 7,440 units is equal to rupees 15 per unit. Now 100% production of process C was sold out at rupees 17 directly from process or by the end of process. So our sale proceeds would be 7,440 multiplied by 17 rupees, that is 1,26,480, and there is a profit of rupees 2, that is 17 minus 15, rupees 2 per unit. It will be transferred to costing profit and loss account. So process C account debit side to profit and loss account 7,440 multiply rupees 2, amount 14,880. My dear students, while selling the goods directly from process, we pass entry bank account debit to process account. It is including profit, and for profit we pass a reverse entry, that is process account debit to costing profit and loss account, that is 14,880, and that is why profit is recorded on debit side of process account. And finally our process C account gets tally with 8,000 units and 1,28,080 rupees. That's all. Dear students, thank you very much for watching this video lecture. Very soon we will meet with another example in the same chapter.